Okay, so yeah, everyone, I think we'll be getting started now. My name is Anna, and we are Epic Events. Let me share my screen. Okay, so we are Epic Events, the organizer of today's Deep Tech Pitch event. Epic Events is an e-commerce website for frontier technology products and events. Frontier tech includes AR, AI, blockchain, robotics, biotech, and other bleeding edge industries. Today, we have a non-deep tech pitch event. So I want to cover the format of the pitch for our audience. And okay. So each team will have 10 minutes, 4 minutes for presentation, 3 minutes for Q&A. If we have any remaining time, we will open it up to the audience. And then lastly, we have 3 minutes for the judges to give their feedback. And before starting the panel for the pitch, I'd like to cover the virtual networking portion, which is after the pitch. We'll be using Zoom's breakout room feature. We'll provide a link that takes you to a different Zoom. And so we'll be sharing that towards the end. All right, so I'd like to give our judges a chance to introduce themselves first. So judges, can you please introduce yourself, your company, any investment thesis, and any prior relevant investments that are relevant to our event today? You guys can go. Graham, let's have you first.
Yeah, sure. I'll take it off. Hi, my name is Graham Gockley. I'm a principal at Transcend Fund. We're a relatively new fund investing in games and games-related digital media businesses. It's a $50 million fund, early stage, so check sizes from a couple 100,000 to a couple million. Yeah.
Awesome. So can we have Susan next?
Sure. I'm Susan. I'm with Scale Venture Partners. I've been there for several years now, and we focus on investing in B2B startups, generally in the Series A stage and beyond, so we're a little bit later stage. We closed our most recent fund maybe like a year or two ago. It's a $400 million fund, and typically when we're investing in startups, we invest between 5 to 25 million.
Okay, awesome. Next, can we please have Amy?
Hi, I'm Amy. I'm a VP at Costanoa Ventures. We're an early stage fund based in San Francisco, focused mostly on B2B software, fintech, and marketplaces. And investing out of our fourth fund right now, it's about $200 million. And we typically lead or co-lead at seed or Series A, investing, probably 1 to 10 million across those two stages.
Awesome. And lastly, we've got Tim.
Hey guys, I'm Tim. I help run the Chicago Booth Angel Network Silicon Valley. So we are alumni of Chicago Booth, which is the business school at the University of Chicago, as well as we invite alumni from the other schools at the university. And we host pitch nights pre-pandemic, I guess, every 6 to 8 weeks, in-person pitches, and we collaborate with a number of other angel groups locally, as well as other chapters of our C-band, as we call it, around the world. And no particular investment thesis, but it is very, very early stage because it is angel investors. We do have a couple of professionals who use it for deal flow, but broadly, the only thing we kind of steer away from is FDA-regulated companies.
Okay. All right. So let's start with the pitch. First, we've got Jason Cavness of Cavness HR.
Hello. I'll share my screen real fast. Good afternoon, and thank you for this opportunity. My name is Jason Cavness. I'm the CEO, founder of Cavness HR. We deliver HR to companies with 49 or less people across the United States. Cavness HR, focus on your business. We've got your HR. This is Margot. She's a small business owner. Margot knew she needed help with HR, and she wanted to hire an internal HR person, but could not afford a salary. And after bringing on an HR consultant, she quickly realized HR consultant was overcharging on price, under delivering on value, and she brought on one of the larger HR companies that did not meet her expectation. Cabinet HR is for small business owners who know HR is important, but either can't afford the current solution or the current solutions do not meet their expectations. According to the Small Business Administration, there's over 5 million small businesses in the United States, and small business owners are spending 25% of the time on HR. Time better spent on scaling the company and taking care of the customers. Also, small business loses an estimated $27 billion each year on bad HR, what comes out to $10,000 per employee. At Cabinets HR, we deliver HR products and services based on the location and industry of our customers through our online platform, and we provide a dedicated HR business partner for each customer to provide responsive HR advice. The team, myself, I'm a retired U.S. Army officer with 30 years HR experience, and also have previous startup experience and have a master in HR. Danielle Boots, who actually worked for me for a few years in the Army, has 10 years HR experience and a master's in HR. And Jess McCarthy is currently the VP of HR for the largest healthcare system in New England. And we have a board of advisors. For the market, there's some $653 million. That's their revenue for HR consultants from the state of Texas West. We have 7,200 competitors, which is a lot, of course. But of note, the top 50 account for 70% of the revenue. HR consultants is who we want to put out of business, and we consider Bambi our #1 competitor. For core HR, that's basic HR products and services and responsive HR advice. We participate or been accepted several startup programs to include Patriot Bootcamp, which is sponsored by Techstars. For pricing, that is based on the number of people in the company that we serve as our customer. We currently have 1 customer and 50 on our wait list. We've done a good job on social media and other platforms. We have over 33,000 people follow us on social media. And we do a weekly podcast where we're averaging 1,200 downloads per episode. We're seeking a $600,000 seed round at a 3.4 pre and a 4 post. Majority of the funding will go to software development and salaries. Thank you for your time, and I look forward to your questions and feedback.
All right, thanks, Jason. Judges?
I had one quick question, Jason. Can you talk a little bit more about what the technology is and what's proprietary about the product versus your competitors?
There's nothing. I mean, what we're doing is the same as other companies are doing. There's no rocket science. You know, there's nothing like IP or patent nor worthy. We might have a different tech stack, but nothing's. I mean, it's pretty much all the same.
I'm
And is that
curious why,
software web? Okay, go ahead, Susan.
just a quick question here. I'm curious why your customers are choosing you over others.
Because we're like most HR companies, like for employee handbooks, they give you a template. It's the same template whether you're in Seattle or Dallas or Houston, and all the companies are the same. You know, where we send the customer 10 questions to answer, which will help us tailor all the products and policies to their location and the industry. Like example, restaurants have different rules from manufacturing plants versus other things, and most HR companies they say they have a HR manager for you, but every time you call or contact them, whatever way you do it, it's usually a different person. So you got to spend time explaining the background. Whereas we're gonna have the same person each time. And on top of that, like Bambi, our #1 competitor, all the HR people are in Santa Monica. So if a company in Texas calls them, someone in California to take care of them. We're all vision to have like an HR business partner, at least in the same state as our customers.
And Jason, is the technology web-based, or what exactly is the software that you're trying to build?
Yes, it's going to be an online platform. It's like 50% done right now.
Jason, you said that kind of in some ways what you do is not that different from what other companies do. So what do you think is going to drive your company to be successful versus other companies? Like, what
The-
is there any differentiation? Is it all distribution? What is it that sets you apart?
I think it's going to be the dedicated HR business partner. And plus, like we give a lot of free value out. We're, good on social media, that kind of stuff. And just a personal touch, so to speak.
Does that scale?
I believe it does.
Okay, judges, any more questions? We have 30 seconds.
How do you leverage all of the sort of success in social media and so forth? Like, how does that translate? It's a great number having 31,000 followers across 5 platforms, but what does that get you?
Yeah, great question. So the last year and a half, we like really gone on social media. So like I tell people, like we're not selling donuts and candy bars, so you're gonna take a lot of touches. So we've been building up those touches the last year and a half, and now actually this week we start like going out and like actually doing sales and that kind of stuff, and trying to like tomorrow I actually plan like reaching out and to each of the. So I've done 144 podcasts. So I plan on tomorrow and the next few days reach out to one of the podcasts because basically, I mean, of course I wrote a business, but say, hey, thank you for being on the podcast. You got these number of downloads. The platform about ready to go live. How can you help us out, so to speak, and can you refer anyone to us?
Okay, judges, feedback, please. 3 minutes.
I'm happy to start. So thanks for sharing this with us. And I think the way I would look at this is, you quite honestly, in a very honest manner, answered the question on differentiation, which I do appreciate. But kind of as an investor, and this was my line of questioning, is I want to understand what sets you up for success versus the others. And if that's, experience of the team, if that's certain execution that you're better at, I guess I'm missing in your pitch, what is it that makes the company unique and where I can look to success? Is it a prior exit with a company, any of those things? And so, I think as you go pitch to investors, see if you can include that in your pitch, what truly is different. And it doesn't just have to be the product, it can be something else. And if it's a matter of sales is better than you think is better than other companies, then show prior sales track record and prove that to the investors.
Yes, thank you very much.
Yeah, I can go next. Thanks, Jason, for the time. And would echo, a little bit of what Tim said. I think if the core differentiation here is that you are kind of a services business, I think that's fine. You just have to own that and talk about the fact that it's the people and the team and the quality of the service that you're able to offer. And I would recommend, if that's the route that you're going to go, think through how you pitch your margins and know that some investors are going to be nervous about a service-based business. And so really think through how you talk about that and how you represent that. But agree with Tim that I think making sure you have a well thought out answer to the question on differentiation. And the answer can be sales motion, distribution, it can be people. But I think thinking through that answer is really important, but really appreciate the time. I thought you did a good job.
Thank you.
And without piling on too much, I also agree with Amy and Tim. And the reason why I say that is because HR tech has become one of those spaces that have become super hot. And there's hundreds of companies that are tackling this market. And so
Yes.
It really is important for us to understand why you would stand out versus some of the other companies out there. And if you're in a market where there is a big incumbent, I think it's really important to understand what your wedge is, how you're going to enter that market, and why people would choose you versus others.
Okay, thank you very much.
Yeah, and the only thing that I would add is if it'd be good to understand if it's a software-enabled solution or just like we're talking about a services-enabled solution. Just the fact that you can always kind of pick up and talk to somebody on the phone. That is a significant value add to some people. You can make that more explicit.
Yes, thank you very much.
Okay, we've got 7 seconds, but I guess, does anyone else want to add to that? All right, okay. We will be moving on to our second pitcher tonight. It's Russ Jones of Cargo Chief.
That sounds great, Anna. Thank you very much. Can people see what I'm sharing?
Yes.
Great. So first, let me kick off. We play in the world of trucking. Just to give you some thoughts about the last 3 recessions, the stock market went down 30 to 50%, but the world of trucking went down, prices went down 5 to 10%. So it's somewhat recession resistant for obvious reasons. It's a big market, of course. There's some tech-enabled freight brokerages like Uber Freight that's taking their IPO cash and buying the market, and they sell services to Coca-Cola and Procter & Gamble and other shippers. We focus in on the traditional brokers that are buying there's 18,000 of them buying $200 billion worth of trucking capacity. And they have 2 main problems. First, which of the hundreds of thousands of trucking carriers should they use for their next load? And secondly, what's the current market price? There are, on the other side of the transaction, hundreds of thousands of small trucking companies. The vast majority are using a whiteboard or Excel to run their business, and they don't know the price. You can imagine the misinformation and disinformation that happens daily in the world of trucking. Our first product is something called C4, stands for Cargo Chief Carrier Capacity. This is an unparalleled array of integration technologies that enables any size carrier to seamlessly share its available capacity with their platform. We aggregate that together. We charge the broker a couple $100 a month per seat, and then we present the data to them on our website into their transportation management system through an API or partner. For each of our partners, for our client, we expect them to have a 5 to 10x return on our fees because we're helping them to buy more loads per day and buy a slightly better price. Again, they're on lean EBITDA margins, so even a slight improvement on costing greatly enhances the profitability. And we have hundreds of thousands of carriers in our network. We're about to launch something called Lane Master, which is the industry's first real-time pricing engine. The current providers of pricing information are providing data that's 30 days old. Our modern-based, API-based technology enables us to present the current market price and not have it be delayed. That's a huge advantage to someone who buys freight all the time, as well as to carriers who sell freight all the time. We're also enabling the buyers to score their teams with Lane Master. We have a compelling, unique co-op structure, very much like REI or Land O'Lakes, where everyone shares in the revenue. We don't have any salespeople, so when I'm not playing product manager or talking to the banker or the board or investors, I sell. We have dozens of users on the system. Most are paying customers that are referenceable. The last reviews have been coming in around 4 out of 5. The users on the system represent billions of dollars of freight spend. There are hundreds of other firms that have expressed interest of some sort. We see our target as a smaller broker, $5 to $50 million. That's too small to make their own technology. When we talk to a target about our product C4 that helps them figure out which carrier to work with, and Lane Master, what's the current market price, something like 80–90% of the people are interested in the solution. We reach them through typical inside sales techniques of emails, conferences, and Zoom. I've been a CEO for 15 years. This is my first startup. I have 9 patents and a Harvard MBA. Michael has a PhD from Columbia, had risk for one of the largest banks on Wall Street, started up a fintech company, analyzed likelihood of default to derivatives. Kirk's a serial CTO. His last startup was a marketplace for QA talent. Between the 3 founders, we have started 8 companies, enjoyed tens of millions of startups. The model is very compelling. With a raise of just $350K, the company gets to cash flow positive in 3 quarters. Last year's sales were $500,000. We're now focused on getting to revenue or to cash flow positive. So we think we'll get there in 3 quarters. Then you see a ramp up of sales as we start to hire more salespeople. We then increase number of services and we increase the price of Lane Master. We also have a favorable lifetime value to CAC ratio. As a summary, there's 4 main reasons why we have multiple repeat investors. First, it's a great market. There's literally 1 million buying and selling organizations, this giant marketplace. Prices are changing by the hour. Our customers, the brokers, are on lean margins. Of course, they want to know the current market price. We have, it's a great business model. We're helping our clients be more productive and as a result, more profitable. And Lane Master, basically, we're receiving data for free, aggregating it, and then selling it. That's a great way to make money. We have a number of technical advantages. When we engage with a client, they tell us about their carriers. As a Lane Master customer, they're going to tell us about their loads. That generates a lot of data with powerful insights into our industry-leading databases, and we have a number of patents and more coming. Lastly, the timing makes sense. We have universal demand from large and mid-sized brokers for our service. Uber Freight is actually acting as a catalyst, helping us to accelerate demand for our services from the 18,000 brokers. And we have paying customers helping us fine-tune our product market fit. If you're interested in Cargo Chief, please take a screenshot of the screen and send me an email. Thank you, Anna.
Thanks. All right, judges, 3 minutes. Any judges have questions?
Yeah, Russell, can you talk a little bit about the competitive landscape here and why no one's done this before? I mean, it seems like a really interesting opportunity. So just want to make sure I understand the landscape.
Amy, thanks for asking. For C4, the primary competitors are 25 or 30-year-old technology called load boards, which are electronic version of what used to be a truck stop 50 years ago. They'll tell you that 10 Truck Tommy has a truck in Oakland, give them a call, good luck. They don't have any of these add-on services that we sell on our system that helps a broker be far more effective and efficient. For Lane Master, we're not aware of anyone that's providing the current market price, that's scoring the buyers and sellers against market averages, or has this innovative co-op revenue structure. So our competition is related or stale. We're unaware of direct competition.
Thank you.
And what's the customer acquisition model? I know you mentioned that you're focused on smaller companies that don't have the ability to build their own software.
Yeah, so we reach out. We're connected electronically with the governmental division that manages freight called the FMCSA. We get a download every month of every new broker, every new carrier. We know who they are. We know how to reach them. And so we reach them through direct mail, email. We meet people at conferences. I speak at many conferences. We do a lot of PR. There's over 100 stories on Cargo Chief. And then we close business through an inside sales model via Zoom.
Any other questions from the judges?
Hey, Russell, this is Tim. Good to see you again. So Russell actually came and pitched to us about a little over a year ago, I believe, if my records are right. Wanted to just kind of, I guess, get an update. What do you think that has changed in the business, or how have you progressed in the company since we last spoke?
What's different, thank you, Tim, for asking. What's different now is that we amassed the most comprehensive database of carrier preferences since we met with you. And we now know better than anyone else in the industry which carriers want to go between what cities on what days and how often. So that led us to starting to have referenceable customers, which we didn't have when we presented to you. And we also work, since we talked with you, on Lane Master, the industry's first real-time pricing service. When we launched that, that could be very powerful. Think of it as analogous to day one of the New York Stock Exchange. The previous day, people would be trading shares of AT&T stock at pubs throughout Manhattan. When the New York Stock Exchange opened for the first day, it was the first time there was a central place to get information about what is the current price of a share of AT&T stock. We're doing that for an $800 billion industry.
What are you looking to raise right now?
We are raising thank you for asking. We're raising 500. We're looking to raise 500K in a convertible note. 200K has already been committed. The valuation cap is 7.5, and it's a 20% discount to next year. And we're throwing in a kicker warrant for people that actually are in the first 2 weeks. I should update the slide.
Okay.
Okay. We actually had a question from the audience. Does Cargo Chief support international freight? Sorry.
We work with Canada and Mexico. We don't go beyond North America currently. Thank you. There's people interested in our technology in other countries, though. You could take our model and license it to other countries.
Okay, judges, time for feedback.
Yeah, I guess I didn't have a chance to ask a question, so I'll start with feedback. Yeah, the pitch is pretty clear. The only thing I wasn't clear about was the pricing model, and mostly how that relates to the sales cycle and how that's going to allow you to grow. So obviously B2B isn't my specialty, but I didn't quite pick up on how you're going to get new people in the door, especially if their margins are so low already.
It's a SaaS $200 a month sales model.
$200 a month, and then and you're personally contacting all of these people, or is there any way that you can make a self-service platform to allow you to scale faster?
Sure, by partnering with the transportation management system vendors, we can give them a cut of the revenue and they can become our advocate to sell our service and make their offerings better.
Okay, so some channel marketing there. Okay, great. Thanks, Russell.
I can go next. Thanks, Russell. Thought you did a great job. And would kind of echo what Graham had said. I think ensuring that you talk about customer acquisition strategy a little bit earlier in the presentation is really helpful here. I think especially with a pretty full market of load boards out there, really commenting on how you're going to differentiate and why the software is different, and why the integrations you're able to provide make you better than the load boards, in addition to some of the specific marketing and sales motions that you're able to go through in order to attract customers efficiently at scale, I think is really important to include. But generally thought you did a good job and really appreciate you taking the time.
Susan or Tim, feedback?
I don't really have anything to add to that. Sorry.
Yeah, I don't really either. I mean, I guess the one thing I would think about is we've spoken to a couple of companies that also target this market, and for brokers, their margins are so thin that oftentimes it can be challenging to get them to purchase additional software. So maybe it might be helpful to add something, maybe a slide or two addressing that point. It might come up in your future conversations.
Okay, the ROI for the customer is 5 to 10x. That's pretty. I think that's pretty strong. And the entry point is $100 for Lane Master currently. I think that's pretty low for a guy buying a couple, $2, $3 million of freight a year. And at least the feedback we've heard from customers that are very excited about Lane Master, who wouldn't want to know the current market price when you're buying freight all day long and selling it too.
Okay.
Anna, thank you for the opportunity. I appreciate it.
Yep, no worries. Time is perfectly up. Okay, so moving on, we are now going to Arun Krishnan of N Factorial Analytical Sciences.
Hi, am I audible?
Yes.
Okay, thank you, Anna, for giving me the opportunity here. Good day, folks. And I think I might be the only one outside of your time zone. I'm sitting in India right now. It's 4 o'clock in the morning. So just a brief introduction. I'm the CEO and founder of N Factorial. I have more than 22 years of experience in academia and industry across the US, Singapore, Japan, and in India. So what is it, what are we? So I started up in December of 2014, and we are a HR tech analytics company. We are slightly past the early stage in the sense that we are a cash flow positive company. We have revenues flowing in, and we have a product that's demonstrated scale. So we have our biggest customer is the Indian Hotels Company Limited, which goes under the brand name of Taj Hotels. They use our platform across more than 90 hotels all over India, Middle East, Maldives, Sri Lanka, Malaysia, etc. So what do we do? Now, everybody knows that employee and customer moments of truth are critical to an organization's success, right? So you want to understand how your employees feel at any given point in time, or your customers. However, current systems are broken and siloed. They don't allow organizations to identify issues at the appropriate time. And even if they do, a few of the systems do allow you to have these surveys, run these surveys, etc. But there's no way to, figure out if you can take the right actions. And once you take the right actions, to actually assess the impact of interventions, because what they do is more like snapshots in time, like a survey every 2 months doesn't really serve your purpose. So what we do is we enable organizations to provide a great employee and customer experience using our suite of platforms called Engage and Encourage. basically for employee feedback, customer feedback, 360-degree feedback, rewards and recognition, and also organizational network analysis. In fact, we partner with Ernst & Young here in India. We are the technology partners for the organizational network survey. Okay, I'm going to show you a quick glimpse at how the platform works. So essentially, companies use us. We have multiple ways to get questions out to the employees, desktop apps, mobile apps, emails, SMSs with links, you name it. Very quick to answer. Just click on it and it's gone. And then you could have follow-up questions also based on how you answer. And then you have managerial level dashboards that tell you where you are, that give you a feel for what your teams are doing. We have AI-based churn and attrition prediction models, alerts that go out to managers. We do a lot of text mining, NLP, kind of analytics, sentiment analysis. We have our own proprietary algorithms for identifying themes from conversations or from feedback that people are giving. So I'm not going to go through the entire list here, obviously, but we do a lot of work with the data to provide great insights to managers at every level. What's a typical customer profile? We typically tend to target organizations with at least about 500 employees, which are geographically distributed, and where you know that there's an interdependency or between people working together. Now, the current pandemic has actually thrown up more of a need for continuous feedback and employee engagement platforms, right? And we have been getting a lot of requests for rolling this out across different banks, because a lot of people in India now are working from home and abroad as well. So I think this is while the pandemic is forcing everybody apart, I think from a business perspective, this is a sliver of opportunity for us to actually enable organizations to use our platform. A quick case study with Taj Hotels. Before they came to us, they'd been carrying out these annual engagement surveys for over 10 years. They started using our platform. They didn't really get much out of it because they felt it was post facto. It was like a post-mortem of things that happened wrong rather than anything real time. Now, like I said, they're using it for over 22,000 employees all across India and the Middle East and other places in Asia. They've seen significant positive correlation between the engagement scores and the customer net promoter scores because of this. These are just some of our customers. There are a few Amazon subsidiary companies like Prion, Cloudtail, Frontizo, Pario here in India as well. And these, what are our key differentiators? We have a difficult to replicate analytics engine. Some of our algorithms are proprietary. We've actually, got patents pending in India and the US for our platform. There's a unique survey methodology. Typically, you would see, these pulse surveys go out, but since we do it one question at a time, we tend to get time series data, and so then we can bring a wealth of analytic techniques to bear on it. We have an integrated solution integrating employee and customer feedback, 360-degree feedback, rewards and recognition. Hopefully in future, we're planning to also do real-time, real-time employee reviews as well. And so that bring everything back into a single platform. And like I said, we've tested it, we've scaled it, the product is working, and it's out there currently in the market. The ask currently is for $3 million, and it's primarily for, also growing the product at a faster rate, but also marketing and sales. We know one of our biggest challenges is the fact that we haven't made it to the US market yet, and that's where the money is, right? Everybody knows that, I know that, and the idea is for me to get to the US market, and that's where the ask is coming from. Okay, I'm going to stop now, and then if you have any questions, I have other slides that I can take you through with the competitor analysis and so on. Thank you.
Okay, judges, Q&A.
It would be great if you can go through the competitive analysis, because I think that would be my main question.
Yeah, sure. Okay, so this is the competitive landscape. So there are a few customers, companies, right? And these are the main ones. Actually, I would like to point out Glint as the biggest of the lot. Glint was bought over by LinkedIn for, I think, close to $400 million. But the market is huge, and the size of the pie is really, really large. And I think what we bring to the table in terms of a unique combination of bringing all of these different elements together, I think that places us well. And we did kind of let me just see if I can. Oops. Sorry, just give me 1 minute. I had one slide. Yeah, we did an analysis of where we were with respect to Glint and Office Vibe and Tiny Pulse, and we have certain things like intervention analysis, which actually talks about, which allows us to figure out whether the impact of interventions that have been taken. The only reason we can do that and others can't is because we have continuous data. When I say continuous, because of the fact that we are putting out questions one at a time, almost every day or every other day, we have time series data that others lack. They have snapshots in time, and so they can't do some of the things that we can do from an analytics perspective. Also, we have with a company as complicated as Taj, with multiple time zones and multiple, we've rolled out these things in more than 10 different languages, etc. So we have that skill set of doing multilingual platforms, in a sense. I hope that helps answer the question.
Yeah, I think just as an addendum to that, you had multiple verticals listed there, and obviously you're looking at hospitality, and Taj is your biggest client right now. Would you focus on that vertical going forward, or how do you think about expanding the market and improving out your validation in different industries?
Actually, not really, because if you look at our base, right, we had rolled it out to Manipal Hospitals, which is in the healthcare space, Prion and Cloudtail, Frontizo Apparel, these are all in the retail space. So there's a bunch of different companies here across the spectrum. Because Taj is our marquee client, yes, it makes our entry into that segment a little easier. And also the fact that, like I said, it's our ideal client because they are distributed and they find it very difficult to figure out what's going on in real time. So as long as those two conditions are satisfied, we could take this across any industry segment.
How did you get you to your 12 million pre-money valuation?
So we did an evaluation here from an Indian perspective, based only on the Indian market, and we got to about $3 million there. And then I spoke to folks in the US of similar products, and we just did a scale up based on the per employee value that we would get in the US as compared to India, which would be easily in the 4x range. So that's how we kind of got to that.
All right, judges.
What kind of, go ahead.
Go ahead, actually.
I was just going to ask, what kind of staffing and how does that change your cost structure? What kind of staffing do you need, and how does that change your cost structure if you were to enter the US market?
Sure. See, the good thing again is since we are based out of India, at least I don't see our development team being based out of anywhere but in India. So we kind of have a lower cost base in that sense. We do need feet on the ground in the US, and we do need a presence in the US, which is why the ask was for 3 million. If it was for us to be based out of India, but then use some sort of partnership model, my ask would be lower. It might be about 1 million or maybe 750K. So that's the reason we did 3 million, is because we feel that we need a presence there. We need salespeople there who can, and I might even have to move there, which is fine. I'm okay. I'm open to that.
All right, judges, let's move on to feedback.
I guess I could start. I've looked at many of the companies on your competitive landscape, and they're all tackling the US market. So I'm a bit curious why you want to also tackle the US market as well, when maybe there might be a better opportunity elsewhere, like India?
Great question. The only challenge is India is a tough, very price sensitive software market, right? Mm-hmm. And in that sense, it is I've already tried this for about 2.5 years now. And while I do have a loyal customer base, I know that it's a tough market. And so I think my time and effort and money would be better spent going to a market where the sales cycles are shorter and it's easier to get value for money. That's the way I'm looking at it.
And sorry, I'm asking questions and I should be giving you feedback, but
No, that's okay.
I'm curious what your go-to-market strategy would be. So you already have a couple of companies that are quite large, Glint, Culture Amp. You had several others on your competitive landscape. How would you differentiate yourself from the US market?
I think, like I said, what we bring to the table is not just another survey platform, but a way to actually understand the impact of the interventions that people take. So it's not just about providing managers at every level with the insight. It's also about, okay, hey, here's your data, here are the insights, here's what you can do, and here is the impact of what you're doing. And I think that's a clear differentiator from what I've seen. I've seen Office Vibe, and I don't see that kind of, and I don't see it because they don't have the kind of real-time time series data that we have. That's the biggest differentiator.
Got it. Okay, makes sense. I thought you did a great job overall. I would actually lead with how you differentiate from the rest of your competitors, because I think that's probably going to be the main question.
Okay, thank you so much.
Yeah, I can go next. Arun, thought you did a great job. Agree with Susan that I think it'd be great to pull some of that forward. I think, broadly, when you think about how investors feel about HR software, especially in the US, where it's a really crowded market, like calling out differentiation early is really important. And I also think that in the current macro environment, when you think about the impact of coronavirus, like a lot of folks are going to be questioning their HR budgets and maybe not wanting to spend money on tools that they might see as things that are more important to employee retention in upmarket cycles. So it would just be really thoughtful about why this matters in the current macroeconomic environment and maybe pull that forward in the presentation as well. But overall, I thought you did a great job and appreciate the time.
Thank you, Amy. Appreciate it.
Yeah, Arun, thank you for presenting. I guess my feedback is a little bit biased in having sort of looked at a giant culture amp survey upside down and sideways and trying to make sense of it, and seemingly relatively negative feedback in there, or in spots at least, trying to sort of do something and have it be actionable. And so I guess on the positive side in that survey, what I did really like was the comparison that survey gives you to companies that you've selected as your comps. And so if I were someone that's been in this space, that's kind of one of the first questions I would ask is, hey, I don't, 65%, what does that mean? So being able to pull on anonymized data sets is, potentially harder for you. So I sort of try to answer that question a little bit. And maybe it's not in your presentation, but it's overall a question I would have as a buyer in the US. And yeah, secondly, I think it's just the general sense of how do you actually displace something like a Culture Amp? Because if I'm doing Culture Amp this year, I would probably be doing it again next year because it gives me a much more direct comp, and it keeps a lot of variables static and across years, and it would sort of be better. But yeah, and I guess the biggest thing would be actionable. Like, how do you make this actionable? Whatever comes out of the surveys, and I kind of feel like I don't see a success story or something similar in the beginning of a presentation. But that's not to say, like I said, I'm a little bit biased in my feedback, but that's something to think about.
Okay, no, thank you. That's very, very valuable feedback. Thank you for that.
Lastly, Graham, did you have feedback?
No, I thought it was a great presentation. I think everything the other judges had said is great. And Tim's last point about figure out what your wedge is to get into these markets that already might have established players is a good point.
Thank you. Thanks a lot.
Yeah, Arun, thanks so much. Okay,
Sure.
So moving on, we have Shail Mehta of The Last Game Board.
Hi everyone, how are you? I'm going to share my screen. Can everyone see it?
Yeah.
Awesome. Okay, so I'm Shail. I'm the CEO and co-founder of The Last Game Board. I'm going to make a wild guess and assume everyone here has played board games once or twice in their life. And what we're doing is tackling a complete analog market that is frankly kind of a sleeping giant. The global games market, including console gaming, closed at $152 billion last year. And our total addressable market, our SAM, our core target customer, that market is $1.72 billion in North America. So tabletop gaming, board games, right? So they're physical, they go into retail shops, customers purchase these games. Developers and creators of these games have no way of knowing what happens when someone buys a Monopoly, right? Do they put it on a shelf, never playing it again? Or are they like our target market, playing it for game night, inviting their friends over? Then you have the individualized experience, the app, the online version. And there's a disconnect. There's this missing human element to it, right? And especially in times of COVID, I think we can all agree that the human connection, whether you get it in the physical or through digital, is extremely important. So in is Game Board 1. And I'm going to show you, I'm going to take a minute of your time and show you a video because I'm a very visual person and I like to see product. So, and this is my directorial debut, by the way. So hope everyone can hear.
When I was a kid, I lived for the times when my friends and I would get together immersed in our imaginations. I remember thinking how cool it would be if in the future we could use technology to create this same shared gaming experience as I felt during a movie. The worst part of the day was when we all had to go home. I always wished we could save the game where it was, so we could pick up exactly where we left off. Today, I still love to get together with my friends to play and get lost in our imaginations. But now, I can make my childhood dreams a reality with Game Board 1. The next evolution of gaming is here. Game Board 1 blends the physical gaming world with the digital world. Game Board 1 uses a revolutionary new Sense screen that recognizes real game pieces and multi-touch. Play your favorite classic games and beyond. And try new games in the marketplace. Switch to different games in an instant. The last Game Board mobile app lets me interact with any game. Connect multiple game boards together to expand maps and create a larger multiplayer gaming experience. I can use cards, dice, or any physical game pieces that I already have, or create my own pieces.
So I'm going to interrupt there for the sake of time, but the full video is on our website. But I hope you understand what Game Board is and what the product and platform we're creating. And I created this product and started this honestly to solve my own problems in gaming. And I don't have an engineering background, but our CTO and co-founder, I met him through our love of gaming. He was the original system architect of Microsoft's Xbox. He worked on the PlayStation right after that, Magic Leap, Atari. If there's a gaming console on this planet, this man has a vital hand in building it. We are a subscription-based platform, right? So when someone turns on the game board and the marketplace that's on top of it, that's how we make our revenue. That's what we really focus on. So we charge $399 for the game board, a $15 subscription for access to the unlimited library of our games. We also charge developers to build games for Game Board because we are a gaming company that does not build our own games. So we do a pre-order campaign. We have a little over 200,000 in pre-orders from customers. We have game developers who've purchased the game board already who are currently building on it. We have over 100 games committed to our platform, including some really large titles like Settlers of Catan and Dungeons and Dragons. We have a really low customer acquisition cost. It's $18, and I know it's going to get higher because we do a lot of guerrilla style marketing, because of time, expediency, and money. But we're hoping to get 1.5 million units out the door by the end of 2024. So we actually just got approved for our patent a month ago, so that was exciting. We're doing a $1.5 million seed round right now, and that'll take us to a full product release of Game Board 1. So thank you for your time. I heard the ping.
Awesome. Judges? Q&A?
I think it's my turn to jump in first just because I'm the games investor. So thank you, Shay. Strong pitch. Can you go back to the developers? Are you charging them to build games for the platform? What was that?
Yeah. So we charge developers $749 for access to a dev board of Game Board that we've shipped out to them already. And that gives them access to our engineering team. We kind of onboard them, like how does the game look? How's the UX UI feel? Because it is a new gaming experience. And then if they are not a part of the subscription, which we hope they are, we do a 70-30 split between developers for in-app purchases and expansion packs. But we have a time-based revenue that we allocate for our $15 subscription, which I'm happy to get into.
Yeah, as far as the initial amount of content that's on the system when a customer just picks it up, what are they going to see?
So at launch, so the full product release goes out. So we start releasing game boards in phases at the end of the year. The full product release will go out Q1 of 2021 of next year. And we anticipate 100 games on the platform. That includes larger games, but that also includes a lot of open source games like poker, chess, dice, checkers, anything in that gamut too. So we have developers working on large games and then also the smaller ones as well.
Yeah, and you may have mentioned it, I might have missed it, but if we're remote and you had a board in front of you and I had a board in front of me, can we play together?
Yeah, so if you had Battleship and I had Battleship, I have my real pieces, you have your real pieces, we see digital representations of each other. And the game board has Wi-Fi and speakers and Bluetooth so we can hear each other. We don't have a camera on the game board because where would you put it? You put it down, you'd see up someone's nose. So we have Bluetooth capability so you can sync to an iPad or Facebook's portal where it kind of moves with you. But we do have open Bluetooth spec.
Okay. I have probably 45 more minutes of questions, but I'll let somebody else jump in if they want.
Fine. Thank you.
Yeah, so do any of the other judges would like to ask questions?
I'm sorry if I missed this. How far are you along in terms of having this out to consumers?
Oh, so our developers already have them. Some of our developers, 2 developers actually already have the game board out. We're doing 100 game boards to all of our developers in June of this year. All of our supply chain right now is in the US, so we haven't been disrupted right now. But then the full beta release, like the full product release of the game board goes out in January of 2021. So that's to market, that's everyone that's pre-ordering game boards will release them out.
And what's the use of funds for the 1.5?
So yeah, it breaks down for the 1.5. So 50% of that is going to engineering. For our engineering team, we need to hire a few more engineers, specifically on the UX UI and the software platform that we're doing. There's a really great hire that I want to make. He's an ex-Netflix person and he helped do the subscription and the platform side of analytics. And we'd like to bring on a couple more engineers for that. The 30% of it goes to marketing and the rest is just general operations too.
All right, judges, feedback?
Did my screen stop sharing? Sorry.
Oh no, I stopped it actually.
Okay.
Yeah.
Exactly. So like imagine like it's a message all
I guess I can go. I mean, I think it's a very clean pitch. I think I'm pulled up your deck separately. I'm just looking at the roadmap slide. So I guess it's a very sparse roadmap in the sense that I wasn't quite sure when the money going in, when that would sort of see products being in market and you getting first feedback from actual live customers and understanding willingness to pay and your ability to upsell them. And so in general, I like it. I guess, for me, I'm not a big board game player. I have worked in a gaming company previously as a product manager, but I would just want to see, I guess, a good description of who your true target customer is. If it's, the people that are just into board games, period, or if you can kind of expand beyond that a little bit. But conceptually, it sort of, all makes sense to me, and it certainly seems interesting.
Yeah, the most interesting thing is, we know that the coolest game for game board is not something that we envision. So it's not just limited to board games and tabletop games. We have people building arcade games. There's like this car game with Fast and the Furious where, the car moves and it unlocks like different road maps and they're all blank and they're using the phone as a remote control to like drive it, right? So you have this physical integration and this digital. So it's not just board games and tabletop games. There's a whole other segment with families and stuff that we can go into later down the line. For right now, we are really focused on like Dungeons and Dragons and Settlers of Catan, and we really understand this market. And I think to expand upon that is like a long-term goal that we have.
Okay.
Yeah, other feedback, just understanding the challenges of the hardware market, understanding that's a difficult one to scale and understanding the margins on that. And to Tim's point, understanding initial validation points around that as well. How are you going to get in enough people's hands so you can test out some of your assumptions around their propensity to play, how much they want to play, will they play this over their other board games that they have at home, assuming all things equal, things like that. That's the hardware bucket. The other bucket is just the content question that I was attempting to drill into, especially figuring out, finding ways to not charge people to create content for you. In terms of like social networks and other things. If you look at open marketplaces, figuring out ways to spark supply as opposed to limit supply is going to be a very interesting challenge, and finding out ways to incentivize people to build stuff for you, especially before they might see revenue, is always going to be difficult, but you might find some ways to kind of spark that marketplace.
Definitely. I call our the developers that we have signed on, like our Goldilocks, right? They have analog games in retail. They understand the pain points of them. They've started building like apps and online versions because they need to diversify their revenue stream. So they've created that already. So we approach them as a way to merge the two efforts that they're doing and get like a deep understanding of who their market is and a unique way to have their experiences, which is, yeah, I'm happy to talk about that more.
Yeah.
So.
All right, that wraps it up. But Amy and Susan, did you have any last words or feedback?
Nothing for me specifically. Usually a B2B investor, so hard for me to have a lot of great feedback on the consumer side, but thought overall you did a good job on the pitch, and would echo Graham with the questions around scalability of the hardware.
Definitely.
And same, I also do a lot of B2B, so I don't have great feedback here, but as a consumer, I think it looks really interesting.
Thank you. That's a win.
Yes, it is. All right, moving to our next startup. We've got Stephen Greenwood with Ballast Technologies.
Hi, everybody.
Hi.
Cheryl, I thought I was going to have the most fun presentation today, but I might be taking a run for my money here. All right. I'd like to introduce you today to Ballast, and Ballast creates something that we like to call aquatic virtual reality. So aquatic VR is location-based virtual reality that is targeted to the hospitality and theme park market. We're a very small team based in San Francisco, and we founded this company in 2017, so we're just shy of being 3 years old. We'll turn 3 in July. We bring this technology to water parks, cruise ships, resorts, and hotels. And I know what you must be thinking, this is probably a terrible time to be in this market, but that's not exactly the case. We have a very low overhead business, and we're able to ride out the storm for right now and be there for our customers as they're ready to come back. Now, as they're looking to reopen, they are in need of new attractions to bring guests back in the door. And we have a lot of advantages going for us in this market in terms of cleanliness, hygiene, and some of the advantages of being in a water park, because a lot of these places are very sensitive to hygiene in the first place. So they're actually very well equipped to deal with the challenges that lie ahead in this next year. We have not raised funding to date. We've bootstrapped this and funded ourselves through partnerships and development deals and selling products. So we've earned 1.7 million in revenue. And for our partners that we've sold products to, we've earned them over $1 million in revenue. We have almost 500,000 paid activations across 16 parks in 12 countries. We have 5 people that work full-time on these products. But we have a number of sales partners that have reached out to us and would like to bring our products into their territories. We have patent filings on some of our technology and the methods that we use in our technology, and trademarks for our products. This is what we do. So we take ordinary, boring water slides, we take existing infrastructure, we add an array of sensors to them, and we allow water parks to revitalize old water slides that they have in their parks and charge extra for them. Our second system is Diver, which brings virtual reality to swimming pools. And one of the benefits here is that there's no motion sickness with VR in water, and it allows you to explore environments that you just wouldn't be able to explore otherwise. So being in water gives you a zero-G sensation. You can go through space, make it feel like you're skydiving, or swim alongside whales. And this is the latest product that we're rolling out this spring. This brings haptic motors to the Diver system, so people feel like they're riding behind a high-powered James Bond-style jet. The first installation that we did on the VR slide launched in the largest water park in Europe, and we've had about 267,000 people pay to do that ride. earning about $23,000 a month. Diver launched with a big resort group in the United States called Kalahari Resorts. That earns about $20,000 per month. And we predict that Diver Plus will earn about $32,000 per month. We've seen a lot of success in doing revenue shares with these locations. And the benefit to us is that we don't have to staff or operate any of these locations. We propose a very fair deal to them up front. In the past, we've had them put down a small amount of money for the system and then engage into a revenue share. As they're looking for new attractions and they're cash strapped, we are seeking to completely fund these installations and take a higher percentage of revenue shares. So we are looking for $2 million at a $5 million valuation, $7 million post money. And a lot of this money is going to go into funding these revenue shares and then growing our sales and support teams. So we predict that by the end of next year, we'll be earning about 3.1 million in revenue share alone and 2 million in sales on top of that. And I think that was 4 minutes. So
yes, it was. Yeah. So if you're done, judges, questions and answers, Q&A session.
Yeah, Stephen, can you speak to the overall market as far in terms of how much do these resorts or these cruise ships or these other target customers, how much do they usually spend on these types of ancillary activities?
It's a very good question. You know, food and beverage is really the biggest one for a lot of these parks. And that actually is a significant portion of their revenue. We're really one of the first technology products to be introduced into this market. So typically in some of these places, the only other thing you'll see is like locker machines. And I actually don't have the figures on how big that market is, but that would be a good data point for me to get.
Yeah, and I think my question was actually closer to how much do those parks or those resorts spend on this sort of activity on a yearly basis? How much they spend to maintain their facilities or pay to upgrade their facilities?
Sure. Yeah. Typically, parks invest for water parks to the size that we're going after. They're investing over $1 million every year to either upgrade attractions or install brand new attractions. The issue with a lot of these water parks is that because of the infrastructure involved in creating a new slide, it makes it very difficult for them to add new attractions. So that's why this is great for them, because it doesn't involve any new infrastructure to bring a new attraction in.
I just want to remind everyone to mute yourself. You're not currently talking. We hear some background noise right now.
Yeah, Stephen, one question for you about how you think about the impact of COVID here, right? I mean, most of these resorts and cruise ships are suffering some pretty significant financial hardship right now. And what do you think that's going to do to your sales over the next year?
Yeah, I mean, I do think it's an opportunity, because I think that I do think the cruise ship industry is actually going to be okay. All the signals that we're getting are that they've got plenty of cash and they're going to bounce back pretty strongly. A lot of these other parks that don't necessarily have the cash, I think that's why this is a good opportunity to approach them with revenue shares, so that we can reduce the risk on their end and help them come back stronger as well.
Thanks.
And is there any potential for you to shift to direct consumer markets? For instance, if I have a pool, what would the hardware costs be for me to acquire the same type of technology?
Yeah, great question. It's definitely something that is on our long-term roadmap. At the moment, inside of each one of our headsets, which you can see here, we use Samsung phones that run our custom software. So the unit cost is fairly high, but it keeps the risk and the upfront investment on our end pretty low at the moment. Great for B2B. I see this, potentially being something like a $300 device that has a library of content that could be streamed to these devices. And I do think that there is a lot of potential in basically creating the ultimate pool toy. I think a lot of people would definitely, go for something like that and take a large asset that they have and actually breathe new life into it. So I see a lot of potential in that market. I think we're about 3 to 4 years away from that.
All right, judges, feedback?
I can start. I think from my perspective, you did a great job on the pitch, and I think the idea makes sense. I think my concern would be here, just as I alluded to in my question, kind of concerns around the broader market, going through a really significant financial downturn and not necessarily knowing when that's going to end. Totally think the answer that you gave around the revenue share makes sense. But I think addressing that in the presentation and making sure you've got a clear plan for dealing with that. And then maybe also, mentioning the financial projections that you've got, if they do include, some consideration for that macroeconomic situation, I think calling that out would be important. But yeah, thank you. I thought you did a good job.
Thank you.
Yeah, some similar notes. I think the only thing that I would add is to understand that kind of substitute cost, to understand better the decision that the park is making to potentially invest in infrastructure or do a partnership with you. You can probably make it very clear what the value proposition is there. Break the presentation open.
Thank you.
Kind of along Graham's line of questioning around spend, my question would have been more in terms of total addressable market. I mean, so how many water parks are out there? How many cruise ships? How many people or how many places can this actually be deployed? And so sort of in relation to that, I do wonder for what seems to be a pretty good business that you have going right now, whether you raising from angels, VCs, or whatever is actually your most efficient way to raise. I don't know if perhaps it might make sense to draw down or to get a line of credit or some other alternative funding, which is ultimately a lot cheaper to you than giving up equity. And so if I were in your shoes, I would see if I were to raise equity, which is fairly expensive, if you could get a strategic to invest, right? So at that point, does it, could you get Carnival? Could you, I don't know anything enough about the space to make this sound smart, but who the players are, but if you could go somewhere and get something more for your investment than just money. Ultimately, I think, for a lot of people, this may be too small of an opportunity, but it's still a good business. There's nothing wrong with the business. I would just make sure that you really think about what is your most efficient way to raise money. And then if you were to raise relatively expensive money, get something more for it than just capital.
Thank you so much.
No, just as being an investor in VR, if you'd also highlight the fact that there aren't as many issues with VR if someone's in a pool. That's the first time I've heard that, which is actually pretty unique and definitely a friction point for most consumers when they hear about the tech. But I could see it looks like a snorkel mask. It'd probably feel like a snorkel mask while it was on, and you'd probably find a great way to expand the market. So I'd just call that out even harder.
Awesome. And for those of you in San Francisco, for those of you that come to San Francisco, please reach out to me. Let's go for a swim. I will take you.
Awesome.
Thank you.
All right, let's move on to our next startup. All right, so we've got Mike Mortimer of Podium.
Hey there, can you hear me okay?
Yep.
Superb. Okay. All right, so see the screen okay, yeah? I assume that's a yes. Yep. Cool, superb. Yep. So hey everyone, my name is Mike. I'm the founder and CEO of Podium. I've been mountain biking for 15 years now, snowboarding for 4, and casual gaming since I can remember. And we all know how notoriously engaging computer games are. And it's always frustrated me that I can't experience that same level of engagement in action sports or any physical sport for that matter. For example, I can't instantly challenge my friends to see who gets down a trail faster, or see who's progressing the fastest on jumps, or maybe receive a special award for falling over the least on a ski trip. And so what we're doing at Podium is bridging the gap between physical sports and digital gaming to deliver experiences that 90% of our survey respondents said they want. And we do that by providing a digital platform for action sports where you can engage your community, progress your skills, and challenge your rivals. There are 200 million action sports participants out there today. And our vision, though, is to become a 10-year vision, is to become a digital sports universe where 500 million across many different sports can experience gaming-like experiences. So how do we do it? Well, you buy or rent a Podium IoT device and attach that to your gear. So this is full of sensors and our proprietary algorithms, and that allows us to provide the user with a broad range of skill and time-based challenges. Once the action is over, you retell your story in the Zone app. This is where you receive your awards, celebrate your friends' achievements, and find new people to challenge the next weekend. Now, today's technology and the companies on the market today can't deliver these gaming-like experiences, but we can, because mobile apps like Strava lack integrity. Only 28% trust today's tech, and electronic hardware like Garmin lacks deep community engagement. And so our two key differentiators are integrity and community, and how we bring them together is where we can deliver engaging, rewarding gameplay across physical sports. So initially, we're going to market through the App Store. You can download the app for free and experience the community features for free, and you can demo the full experience at bike parks and ski resorts. If you want to progress your skills and challenge your rivals, though, you need to spend $170 on the device, and then the following year, we'd expect you to renew for $70. There is also a rental option for those who prefer to rent their equipment, and that's more in the snow market. In terms of viability, we're looking at around a 69% gross margin after optimization of the COGS down to $50 and assuming a customer acquisition cost of $30. If we look at our peer data to see the kind of scale we could achieve, Strava had 42 million users as of 2019, and Peloton recently achieved an $8 billion IPO valuation. The sports tech market is set to grow at 20% compound annual growth rate for the next 4 years. Our progress so far, we've raised 250K, we've proven our core IoT technology, and alpha testing has begun. In terms of funding, what we're looking for immediately is 500K at a $4 million post-money valuation to complete our MVP and secure our first large batch of unit sales. Obviously, we need a multi-million round very quickly after that to do a proper consumer-grade market launch. Our team has over 35 years in consumer product and brand development experience, most notably bringing Red Dot Design Award and IF award-winning products to market. And that's me.
All right. Judges, questions?
Yeah, I'll jump in first, given the games angle. With 1,000 devices out in market, are the only real interaction model, is it PvP or is it asynchronous challenges? How are users creating content for each other in that sense?
Yeah, that's a good point. So it's PvP and group v group and solo. So if you prefer to go solo and challenge yourself effectively, you can do personal bests and monitor your progress. But where we really want to drive people is engaging with their community. So that's things like 1v1 and group v group, like red versus blue team, that kind of thing. And so, for example, if you're on the mountain, you could be part of the blue team. You can go down virtually, and we could have a week window where you can go and do a particular trail, and then everyone on the red team does it, and then the average of that becomes the team score. So there's loads of different formats that we can get from that suite of sensors that we have inside the device.
Yeah, and then specifically on the sensors, speed, time, what is the differentiator in terms of the activity that you're monitoring versus other hardware that's out there?
So the differentiator is actually more in the integrity. So yeah, we can do G-force, we got orientation measurements, so we can detect when you're doing a jump and all sorts of things. But the differentiator isn't there. The differentiator is in integrity. Now, if you think about the computer gaming world, when someone gets an award for getting the most headshots on a FPS, there's no doubting that achievement, and the emotion of getting that achievement is there. That's the problem with today's technology. It's not consistent enough for other people in your community to believe what you've achieved. That's critical to awarding digital achievements that people care about. That's actually the differentiator here.
What's the gap between using your proprietary hardware and just using whatever sensors you can grab through an iPhone or Android app on just standard hardware?
So Strava has done us a massive favor there and proven that those platforms just aren't accurate enough to deliver these experiences that people trust. So that 28% was mainly Strava users saying they don't care about the data that comes out of that technology in action sports. So those platforms, their sensor suites were never designed to do the kind of activity detection that we need in action sports. And that's a platform limitation there. So who knows, maybe 5 years time we can switch over to that platform, but today can't be done.
And action sports in aggregate is large, like you mentioned, but in specific, what sports are you starting with?
Yeah, so the very first one we're rolling out with would be mountain biking, very quickly moving on to snow sports. It's not much of an architecture change for us, and that's the reason why. So, but yeah, mountain biking, then snow sports, and then we'll see where we need to take it from there.
All right, judges, let's give them feedback.
I was going to ask another question real quick in terms of unpacking the snow sports one. I'm a big skier. I ski a ton since I was a little child. Explain the challenge. How does it work? Like, I'm staying on top of a trail. What am I supposed to do?
Right, yeah. So you might be at the top of a trail with one of your friends, and you want to make that run more exciting, right? So you can switch the device into, say, 1v1 mode, and then you can say, right, are we competing on the G-force, how many times you carve, or is it just fastest down, or is it air time, and those kind of things. So that's 1v1, so that just makes it more interesting, right? And when you get down to the bottom, the device, you'd look down your snowboard or your skis, and one of the devices will be bright red, one of it will be bright green, and you got win or lose, right? So you get that instant gratification there. And it's just making that more interesting. Now, people today are using apps like Ski Tracks and others, which are phenomenally inaccurate, and it takes that emotion away. So that's one of the use cases in the snow sports space.
Yeah, in terms of feedback, I think I understand the product. I think more of these customer stories would benefit you to understand what the player motivations are in various cases. Yeah. And then also, just because we're also back in the hardware question, like we were with the game board, understanding margins there, especially if your initial customer base is only 1,000. I'm again worried about the amount of content that 1,000 devices are going to throw off that benefit the community, that make it feel like a living place as opposed to more of just a static experience.
Yeah, absolutely. Yeah. So we've got all of that. We have all that mapped out, and each funding round and our capital raises in the next couple of rounds. But yeah, absolutely, that all exists. That analysis.
Yeah, I would encourage you to think a lot about PvE content as well. For instance, if Tim and I are going to Squaw on opposite days, we might be challenging each other, might not be, but we could. Oh, go ahead. Oh, sorry, I think I just heard some feedback. I would think about PvE content and challenges that would allow you yourself to create content that people can interact with, as opposed to be reliant upon the other customers to create the challenges. I
like that. Yeah, thank you.
I mean, I think it's a very clean presentation. I think Graham's feedback is really good. I just, as a user, I don't know that I need to ski down a trail any faster. To me, I I struggle to understand why I kind of need to use this in the skiing context, and that's myopic perhaps. I do use like an iPhone-based tracker when I go to track days. I run a motorsports business, so I go to track days sometimes. And you know, it's that same sort of scenario of, do you go buy a $1,500 lap timer, or do you use this thing called Harry's lap timer, which costs you like 20 bucks and is good enough, right? And it runs off of an iPhone. And to me, it's good enough. And so to me, and the other problem, honestly, is not just the acquisition costs. With a lot of these devices, it's another thing to charge. It's another cable. It's another battery. It's another thing to maintain. And so from a market entry perspective and figuring out whether this idea has legs, I do wonder if it's more efficient to do like a very basic version and get in market with just a purely phone-based system before you go down the path of developing hardware and then trying to get that out into the field and having to do, you know, hardware upgrades and you know, flashes and whatnot. So I think there's just a lot of risk with the hardware, and I'm not 100% understanding, and maybe I'm just misunderstanding, but I'm not understanding why that's necessary in this particular application.
Thanks for the feedback, Tim.
Amy and Susan, would you like to provide last feedback for Mike?
Sure. Yeah. And I think, again, you know, not necessarily my investing extra area of expertise on the consumer side, but would echo that I think, you know, I don't know a ton about the market size here and how big the number of folks would be that would actually acquire a device, right? And so I wonder if, to Tim's point, there's a way to if you do understand that market sizing, putting that front and center and making it very clear, but want to make sure I understand kind of who the power users are going to be. And I think if you think about Strava as a corollary, there's a lot of people that use it recreationally and probably don't pay for the full version. But then there's like a few power users that are really extreme about how they use it. I think probably mostly in the cycling community, honestly. And so appreciate they're probably not going to go after that market initially, but wonder if there's a way for you to think through either a freemium model or some other way to get broader distribution into users that might not be the quote unquote power user. But broadly thought it was a really great presentation, and would just encourage you to think about go-to-market and market sizing and putting that up front in the presentation.
Nice one, thank you.
Nothing to add for me.
All right. Okay, thanks, Mike.
Thank you.
And let's move on to our next. So we've got Max Litzer of Expert Minute. Max, do you hear us? You are still muted and we can't see you. Okay, we may need to move to Al while Max. Okay. Oh, yeah. All right. So yeah, we'll try to reach out to Max in an email. But Amy has to leave. So thanks so much, Amy.
Sorry, I do as well at 4:30.
Okay, so yeah, so I guess in the middle of his speech, his pitch, we may lose 2 judges, but we will make sure you guys connect afterwards.
Awesome. Thanks, Anna. Appreciate the time.
Yeah, thanks. All right, Al, whenever you're ready.
Sure. Let me just start sharing. Here we go. Can you see my screen?
Yes, we see that.
Okay, perfect. Hi, everybody. My name is Al. So let me tell you, I'm a CEO and co-founder of Coil. So let me tell you a little bit more about Coil. So what is Coil, right? Coil is a payment-enabled smartwatch bought by banks in bulk and given away for free instead of plastic cards. So did you know that 83% of Generation Z would want to pay with a wearable, but only 14% of them actually owns one? So what I mean by that is all of the Fitbits, all of the Apple Watches, everything is just 14%. So that leaves 69% or 70% of the market completely untapped. So why is that? Well, because the current solutions are really, really expensive. So with the cheapest one coming in at $160 with a Fitbit, and Apple Watch, of course, is $400, and all the other solutions are just going up. And why banks, right? Because banks, they don't have enough differentiating products to differentiate one bank from another, and they're desperate to innovate because they're losing their customers to fintechs like Revolut, Venmo, and 26 and others. So now you can ask, right, like, why wouldn't they just pay with their phone? Everybody has a phone and everybody can pay with their phone, right? Well, yes, you can pay with your phone, but people are not paying with their phone. Only 24% of iPhone users actively use Apple Pay on their phones, and 80+% of Apple Watch users actively use Apple Pay. So that is a big, big difference. So what is the opportunity here, right? So with Coil, banks can get new customers from other banks, especially now with COVID-19 with touchless payments, and retain the old ones from switching to other fintechs. And on top of all of that, they can increase transactions. So right now we have 3 sign-up banks. We have 22 total banks in pipeline. We expect to deploy around 150,000 devices till the year's end, and current pipeline interest is around 10,500,000 devices. So we're raising 1.5 million, and with this money, we're going to be able to service the first 3 banks that are all already signed. And our team is comprised from serious entrepreneurs with multiple exits, managers at McKinsey in San Francisco, bank presidents, and our CPO is a person who built Apple Pay, Garmin Pay, Fitbit Pay, pretty much any pay you can think of. Our advisors are Stanford professors, C-level Pinterest employees, IIM professors, and high-level Philips employees. So let me tell you a little bit more about our device, right? So it has all the smartwatch capabilities you can think of. You know, you can answer inject calls, you know, app creation capabilities and everything. Of course, because it was built for payments in mind, with payments in mind, it has enhanced security, and it also has contactless payments. You can swipe through cards. You can check balance. Nobody else has that. We can give you card recommendations. You can review payment history and so much more. You can also add all of your access cards to it, and it always works, even if you ran or when you ran out of battery. So if you compare it to a couple of other devices like a Fitbit and an Apple Watch, you can see that we do have options that they don't have, even though they're more expensive. So let me introduce you to your first financial health bracelet. But Cool is more than just a device, right? It's its own ecosystem. So it's comprised of Coil Pay and Coil Dev. So Coil Pay is basically a white label solution for any bank that seamlessly integrates with any bank backend system. And Coil Dev is essentially our own app store for Coil One users that they can download apps, build apps, and so on and so on. So what are apps for Coil, right? So because banks, they don't buy 100 devices, they buy 100,000 devices or 500,000 devices. That's the biggest order we have right now. So they can start building apps upon their platform. So they can build club memberships, hotel chain access, so you don't have to check in into the hotel anymore. You can automatically collect loyalty points, metro cards, budgeting, and so much more. Basically, anything you can think of. So market is really, really big, and it's just getting bigger. Contactless payments are worth 200 billion today, and it's just gonna quadruple in the next 5 years. We expect to deploy 5 million devices with current interest. Expect to deploy 5 million devices in the next 1.5 years. And we make money from, we take a cut from each payment. We take money from the integration. Of course, we sell the devices, and we make money from apps and other add-on services. So if you have any questions, and if you would like to see how the device works, I would be more than happy to show it to you. Thank you.
Thanks, Al. Can you go back to that previous slide?
You.
I just want to better understand how you are making the money. It sounds like you're both getting an upfront payment from the bank to distribute these devices, but then you're taking a from each payment? Can you talk about that a little bit more?
Yes. So the whole point of our device is that, our device is around $15 to $30, right? It depends what type of device they buy, right? So we have a premium device, and then we have a color device, which we call it, like a normal plastic card and a gold card, right? So those devices vary. And we sell them almost at cost. So we make a small margin on those, but we sell them mostly at cost, because our primary means of making money is that we take a cut from each payment. So the more devices they buy, the more devices they give away, the more people pay with those devices, the more they use them, the more money we make, right?
Yeah, and maybe I don't understand the fintech space enough, but does Fitbit or Apple Watch or any of the other smart tech enabled devices, do they take cuts?
Yes.
Okay. Yeah. Sorry, I just don't understand that market as much. And I'm assuming you'll take the equivalent for that.
So we negotiate with each bank differently. So with the first bank is a little bit lower, but with the third bank that we signed up, we take 10% from whatever the cut they take.
Okay. Yeah, I probably have more questions, but Tim, you can jump in, because my questions are probably more rudimentary about how fintech works than this.
Yeah, I mean, it was a very impressive traction so far. I guess a little bit in terms of where you are, and what have you raised so far, and what are you looking to raise, and is that going towards what? Is it mainly hardware, building hardware, or funding that, or what is it?
Yeah, so we raised 120 from Startup Bootcamp. We have 500,000 already committed. And we have a commitment, also a commitment from a Abu Dhabi investment office. They're going to match whatever we raise from a VC. Why Abu Dhabi is because we were part of Startup Bootcamp in Dubai, and we already and we're also gonna sign probably 2 more banks in the next month and a half from the Middle East.
How does the ROI work for the bank? So they're buying it for $20, let's say, from you.
Yeah.
When do they get the return, and how?
Okay, so that's a great question. So first of all, this is a marketing tool for banks, right? So a normal acquisition cost for a bank to get a new customer is around $180. So our device costs, let's say 20, right? So, and then they spend additional $20 for marketing. So we already lowered their acquisition costs for a customer for 4 times. So that's the first thing, right? So the second thing is they're making more money, because now they can dip into they can dip into apps, right? So they can go and do a partnership with a local transportation company that people would usually normally pay with cash, or they would just refill their, let's say, Oyster card. But now they can use Coil, right? So that's additional money for the bank as well. And I don't know if you knew that, but a card costs a bank from $4 to $6, right? Every card they issue is from $4 to $6. It depends where they are. So that's essentially 3 cards that they have to issue to get to this price point. But they make so much more from the stickiness of the product, because you have apps, you have access cards, you can load pretty much any of your card onto it, and they lowered the cost of the acquisition so much that this is basically a money making tool for them.
Okay, so you answered one of my questions, which was it does support multiple cards, so I could sort of bring my existing cards onto it if I wanted to.
Yes.
Okay.
And it supports all of your access cards as well. So if you have access cards for, let's say, the metro, for your gym, for anything else, you can load all of that onto it, because we have MiFair technology and HID technology included into that. And pretty much you don't have to take your wallet anymore. That's the whole point, right?
All right, judges, let's move on to feedback.
Yeah, it sounds like there's two separate business models here. So I'm currently trying to digest that. But it sounds like there's one that's just like the marketing asset for the bank, which is, again, you're helping them acquire customers, you're helping them get these new customers on board, and then giving them a better experience than they are currently. So I think I understand that. And then there's this whole tail business that's all of the services and marketplace component. And it was hard for me as an uneducated person to kind of put those together. Maybe someone else in the market can figure that out. But I'd bring this slide, for instance, much earlier in the deck so that people can understand those components and how they plug into what your value proposition is to these banks.
I can maybe explain that in one or two sentences really, really quickly. Because banks, they don't buy, like I said, they don't buy 100 devices. They buy 100,000 devices, right? So because they buy so many devices, you know, we started building our own ecosystem upon it, and we built our own iOS upon it, because that's where the money is, right? That's where the real thing is. That's how Apple makes money. That's how Google makes money, is from the ecosystem, right?
Yeah.
And because we don't sell one-on-one, we sell in bulk. You know, it only makes sense to build that. You know, right now we have 22 banks. They expressed to buy, just to start with, 10 million devices. You know, that would get us head to head with a Fitbit, right? Not in revenue. I mean, in how many devices
distribution. Yeah.
Right?
Yep.
Yeah, exactly. You know, so it makes sense to build that and to build upon that distribution.
Yeah, no, it's an interesting Trojan horse kind of model that I just didn't click the first time. I think it's very elegant. I just think you can put it up front so that people understand how that works.
Thank you.
I honestly don't have a lot of good feedback. Your traction is really impressive. I like the bulk sales, not having to do consumer marketing. Yeah, I think it's really interesting. There's no sort of comment around needing to find a strategic. You clearly seem to be able to get the distribution you need. You know, I used to work on a payment system, so I sort of try to think through what are the fraud potential here, but you know, generally pretty well-worn path, given that there are many payment solutions out there very similar to this. So yeah, I think it's a really interesting business, and I don't have any really good feedback. I just potentially have more questions, but they're not anything negative.
Okay, well, if you have any more questions, please contact me. I'll be happy to answer them.
Great.
Thanks, Al.
Thank you.
All right, now that takes us to our last startup. Our last startup is Match Litster of Expert Minute.
Sorry, but I'm having all kinds of technical issues.
Fine, and actually, I think Tim, something happened with Tim right now. But, well, he didn't write me a separate message about why he had to leave. We will, okay, great. Tim has joined us, awesome. And is muted, okay, it's totally fine. All right, okay, Max, when you're ready.
Cool. Thank you. So I am the CEO of Expert Minute, and we actually connect online shoppers with in-store employees. We're a software retail tech company, and we wanted to focus on the retail industry. So as a general industry, we're going to talk about the declining in sales that it's had for the past 2 decades. I'll get to the virus in a minute because we actually have a short-term solution for it. But just in general, it looks like there's been less and less foot traffic through the doors. People are buying things online. It's simple, but what it really leads to is a lot of returns for these retailers that are trying to compete and stay alive. If you go into a store and you buy something, your probability of returning it's only 8%. But if you buy the same item online, your probability is 30 to 40% because people make mistakes and they don't ask for help, and there's all kinds of issues. The cart abandonment rates for the retailers is actually between 85 and 95%, which is a huge lost opportunity. Now, our solution is Expert Minute. We want to combine online shoppers with those online, with the in-store employees through a video call that they would have through a tablet or even their phone. They can use anything they want as long as it has Wi-Fi in the browser. Everything works within the browser, and you can add the items as you're speaking with someone. So while I'm holding up this water bottle, once I interact with it and we're having a conversation, it is now sitting in all of your shopping carts. The process is extremely simple to start it. You just have to have a widget on your home page that says, would you like to chat with an expert? It can be a button, it can be a little banner that pops up. It just looks like a live chat, but really it's a new live video chat. And the UI is really simple too. Everything's within the browser. It's a quick video connection, either a two-way or a one-way video, doesn't matter, but you don't have to show your video. It would be just the employees. And once you're done, you disconnect and you have your shopping cart built for you. We never pass any personal data through. All we're doing is we're passing this item that you just talked to an employee about. And really the advantages to this is the retail sales increase. We're talking about a much higher ROI for each of the employees, but also a large returns reduction and that shopping cart abandonment. Even 1% for a large retailer like Home Depot equals to about 25 or 35 million because that's so many lost opportunities. Now, with the current events, with this virus going around, we actually have a solution where we give these tablets out to the employees. They don't have to be in the store, or they can be in the store and the doors are closed. Doesn't really matter as long as they're not having contact with the customers, but they're still having that conversation. They're still using their knowledge to answer questions and add items to the shopping cart. And as far as the company, we have our patent. It's going through, it's been approved, and on the macro financial side, we're going after the larger retailers and even the small portion of the smaller retailers. Anybody that has less than 100 stores we can consider a small business. And just to give you an example, I took the Home Depot's financial statements and I figured out that their average ticket's about $57. And if one employee has 6 interactions at 5 minutes each, that their sales for the year double when you go through the entire thing. So you're looking through what they're actually making, taking out the commission, taking out the fees, taking out that person being on the floor, which is about 215,000. Our revenue is about almost just higher than double that. And our forecast for the company itself is we're profitable after year 2. And after year 4, we're looking at a 7-time multiple. And after year 7, we're at 35-time multiple, because by that point, we've already acquired at least 2 of the larger big box chain stores, and that's what we're really going after. We do have our contact information here, and again, this is Expert Minute, and we are trying to save the retail industry.
All right, thanks, Max. Judges?
Can you go back to that slide at the beginning with the percentage of returns?
Yeah.
So you're saying that 30 to 40% of all online shopping is returned?
Yeah, that number it's changing, and I've tried to take the average, but it looks like it's somewhere between 30 and 40%. There's just such a high percentage of this happening, and it's either through user error or there's some other issues, or it might be a defective item, but the returns is such a large problem for the industry that they're not really sure how to handle it. I was talking to Amazon how they're handling theirs, and it's an interesting process. Like, they just take bulk returns and they don't care what it is as long as it's a fast process. But these numbers are just staggering, especially for retailers who are still keeping their stores open, but then they have to face the e-commerce side of it.
Yeah, I mean, Amazon, as far as I understand, outsources this. They just have third-party providers that buys this in bulk, and then does whatever to get rid of it. I am not sure this 30 to 40%, frankly, is right across all verticals. I run a partially online, partially e-commerce retailer, mostly a distributor. We do have e-com, direct-to-consumer e-commerce for auto parts, and our return rate is nowhere near that. Yeah, I caution this one, so I'm skeptical about this number. But that said, returns are pain. I wholeheartedly agree with that. I would like to reduce them. I'm just, I guess I would want to unpack a little bit more, and I'm just trying to sort of think through what our usual returns are, truly why that's happening, whether the solution actually does that on kind of an upstream manner. And so I think what I would explain more is really understanding that and this is not feedback, I guess, sorry, that your solution truly addresses the problem, in the sense that the returns are caused by things that are solvable via a video chat. And I am not convinced. I'm not saying it's not possible, but I'm not convinced. What's your traction so far with this?
Yeah, right now we're into our pilot phase. So we have the software working, we figured out all the technical side, and we found a store here in Scottsdale, Arizona, and then one in Sedona, Arizona. And we're launching in Sedona in a few weeks. But essentially our plan is to expand into mid-sized retailers and then present it, basically have a revenue stream before we go into the larger box store retailers.
Yeah, I think it's fairly elegant. I'm not sure if you're familiar with Intercom or any other more software-enabled services that allow you to start chatting with somebody during a sales process or during an education process. So it seems like this would be just a great way to add that level of immersion to a shopping experience. So I think I understand that. I agree with Tim that I didn't. The problem wasn't necessarily clear to me, though I think the solution again is elegant, and figuring out how to go to market with that solution. It sounds like Tim and I are both pointing you towards wanting more validation points. So yes, going towards a Walmart or Home Depot could be fantastic. But if you maybe had 10 smaller businesses that have validated this, and then you've optimized the product during that period, and if you can do so profitably, all the better. Might be a better way to help understand what your offering is, and again, what this problem is, if you could more clearly articulate it.
Yeah, definitely. And we're trying to add more stores right now into that pilot phase. So yeah, I want to get as much data as I can on all the metrics, and we're going after the three main ones. That's the sales, the returns, and the shopping cart. So that's what we're going to be doing in this next phase, for sure.
Yeah, that makes sense.
Yeah.
And then are you integrated with any other like Shopify, Square, any other type of like technology solutions out there? Have you started to think about that tech side of the business?
Yeah, definitely. We actually, every store that we talk to, they're using a different e-commerce platform. And so far we're with, we've integrated with Magento and not Shopify, what's the other one? Well, I've said it.
BigCommerce.
It's gave me. What's that?
WooCommerce.
BigCommerce.
I believe, no, it wasn't WooCommerce, but it's one of the two. But right now we're actually, the next roadmap item is our open API. So we're trying to get to a better system of integrating, because we thought it was going to be a much simpler process, but it's been a lot of little things that you have to connect. So with an open API, we can actually just give that to the customer, let them install it, and there's very little for us to do. Even though it could be a small retailer or it can be a large retailer, it should work the same way because it's based on that e-commerce platform. But so far it hasn't been too bad. It's just been the only pain point that I've seen is the actual e-commerce integration, but that's all we have to do.
Okay.
All right, judges, let's move that into feedback.
Yeah, I think because it's just Tim and I, we probably get a mix of both questions and feedback there.
Yeah.
Yeah, and I think the only thing I'd add is understanding more about the team and why the team is well positioned to go against this. If you've had retail experience, tech experience, that could be a good fit for investors.
Yeah, definitely. We have an advisor that's ex-Amazon, and our developer has been designing all of this from scratch. So our patent is kind of revolving around it. And I have a co-founder, it's actually his idea. He came up with it because he just kept driving to these stores and he's got a million hobbies. Every time I talk to him, he's doing something else. And like I'd call him up and he goes, I go, what are you doing? He goes, oh, well, archery. I'm learning how to shoot a bow and arrow. I'm like, what? Why? And he's like, well, it's fun. It's something new. But his deal was he couldn't get to all these stores to ask questions. It's either you have to drive out everywhere, or you sit on your computer for the next 3 days trying to learn all yourself, watching videos, not sure what to buy. There's 50,000 different bows out there. So this is where it kind of originated, and we just started building everything on top of that. We have an investor that essentially a seed round investor where we got the money to build this out, to do the patent, to do all the little things, but for the actual growth that's where our next round is headed towards, really expanding this to everybody.
Yeah, I think my feedback would be around this kind of in some ways feels like the nth tool that you would have to use and subscribe to as an e-commerce retailer. So, you know, in our case, kind of whether it's distribution or e-commerce, we run everything through two systems, which is phone calls come in through dial pad and chat comes in through Front, which is more or less an intercom, and actually email goes into that as well. And it's actually pretty good because it also lets you import Facebook chat, although no one chats us there. My point simply being that I don't know that I want an nth a third tool that I got to make sure it's active and running, and someone's going to monitor it and someone's going to assign it. And it kind of brings up the question of, well, why is Intercom doing this? Like, they've got the widget on, on n number of sites distributed. They've got it, out there in the field, and I'm sure it's just a simple turning something else on. Same with Front. Like, why doesn't Front do this? And there's a few other competitors, obviously, in the space. And so my hesitation, personally, as the one that makes the decisions on what tools we use, is I wouldn't want to use the nth tool unless it's ridiculously compelling. Is it potentially compelling? Yeah, certainly. I mean, I think, in our case, we sell relatively high ticket items, and being able to pull it out of the box and show it to someone, oh, here's what it does, and oh, here, this is a reverse thread, this is this is like, yeah, totally helpful. But yeah, that would be kind of my aversion in terms of using it. And I think that from an investor perspective raises the question of traction. And, we were there earlier, and time is up.
All right. Okay, so judges, if that was it, then that concludes our event. Thank you so much to everyone for attending today.